Hi traders, it's Roberto, and in this lesson I'm going to show you a very simple strategy using a 1-hour chart. And this is when you're trying to figure out directional bias and there's a start of a new session. And in this case it's the European and UK session. So we're looking at three pairs: pound New Zealand, pound Aussie, and pound yen. So I like looking at correlated pairs, and this is a trade set up for May the 20th, and price did go up, but also it was nice that we had some news event that pushed price even higher. So coming into a new trading day, let's start with pound New Zealand. Market was in an uptrend. Price came back down to the central pivot point. Also, it happened to be the central Bollinger Band. So here's the Bollinger Band, price coming back down to support. And as soon as price breaks above that central Bollinger Band and above the central pivot point, that would be your buy entry right there. Okay? And since we're in an uptrend, and this is the opening of the European session, then ideally we'd like to stay in this trade through at least 11 o'clock, 12 noon Eastern. So usually that's when the UK session closes. And there it was. That was about 3 hours ago. That was 11 o'clock Eastern. Market found a resistance, and there's the retracement. Okay. Same thing on pound Australian dollar. Price came back down support, broke the central pivot point. That would be your entry right there in this candle. And you're staying in as long as price is above this central Bollinger Band. Okay. When price is below the central Bollinger Band, we're in a downtrend. When it's above the Bollinger Band, it's in an uptrend. And the same thing with the central pivot point. When price is above the central pivot point, the market's in an uptrend. If it's below the central pivot point, then we're in a downtrend. And the last one was pound yen. And it's the same thing. This was a very easy trade. Price went up a lot higher than expected because we had news out of the UK that was positive. So coming into Friday, what we're looking for is, let me just make this, straighten this out so you can see, and also show you the historical data, how each day you can just take a trade based on these indicators: price action, pivot points, and Bollinger Band. So coming into a new trading day, the market was in an uptrend. Price was above the central pivot point, above the central Bollinger Band. Price retraces like it normally does before the European session, and then there's your trade. Okay. Now, if you look back, historical data, notice here, price was below the central pivot point, shot down below the central pivot point, below the middle Bollinger Band, and it sold off. Okay, and the same thing happened the day before. Initially, that was the retracement. Price had sold off at the end of the New York session, and that was a retracement, and then price broke below the central pivot point and Bollinger Band, and that was your trade. And it continued the following day. Okay, then it was completely oversold. Price found support, came back up in the beginning of the Asian session. Price was above the central pivot point and above this central pivot moving average, or rather it is a moving average line inside the Bollinger Band, and you would take this trade. Notice how price just would gets rejected at this moving average middle of the Bollinger Band, and then it continues to go up, and then it retraces the next day, and this was Wednesday's trade, and the market went up. And that's it for the tutorial. If you have any questions, if you're interested in taking your trading to the next level, just log on to fx-northwest.com. We offer private coaching sessions, trade signals, trade copier. Thanks for watching the video. Have a good week.